darker. Yeah, it says,
Hi everyone, welcome to our presentation tonight, Social Security for Boomers, presented by financial advisor Philip Arnheiter of Gladstone Advisors. He's going to present a workshop for us that explains everything you need to know to start thinking about retirement and preparing you to file for your Social Security benefits. So Phil, if you'll join me, welcome to the library and thank you for joining us tonight.
thank you, Lisa, for having me.
You're welcome.
Appreciate it.
Now we'll learn all about Social Security for boomers.
Yes. At least we'll scratch the surface. So what baby boomers need to know about their retirement? We're going to start with this, and people are hurting their retirements by making terrible, costly decisions about Social Security. The biggest problem we have, actually, and some people can't avoid it, is people taking their funds out as soon as they turn 62. They start taking the money out. And we also can give you these programs, if anyone would like these, you can get in contact me, I'll give you one of these brochures. It explains a lot of what we're going over tonight. Now, you may have claiming, things you don't know about, or would like to know about Social Security. You may have claiming options. Decisions have far-reaching consequences, and they do. Choice impacts both spouses. System is not bankrupt. Boy, it heard for years it was a bankrupt system, and it's not. It's doing well. Now, they might have to change some things down the road, but we'll discuss that in a moment. Benefits of likely help the family member. Your friends aren't experts. And I got to tell you, I get a lot of questions about people. Oh, my friend told me this, my friend told me that. It's not always right. So you got to be careful with that. Okay, so will Social Security be there for me? How much can I expect to receive? When should I apply? How can I maximize my benefits? And that's a real concern. Is it enough to live on? Understand the value of social system. So we're going to cover this right now. Will it be there for me? Yes, it's going to be there for you. It's going to be there for me too. So, and for everybody. Now we have a lot of money in it and a lot of money going into it. Basically, the current workers are paying for us. I shouldn't say us, but whoever's on Social Security, the current workers pay for them. Right now, the total income, as you can see, is 1.18 trillion. Expenditures are less than that, so we have net increase in assets of 11 billion, which isn't a terrible lot, but it's a plus balance sheet right now. However, what's going to happen down the road, as more and more boomers retire, the costs are going to be more than the number of workers out there putting into the system. So somewhere around 2033, it's going to start dropping off in 2034, that they can only cover, in today's world, the benefits of 78%. In 2095, we're going to be able to cover 74% of benefits. So there's got to be some changes. So the expenses are up here as it stands now, but the coverage is going to be down here. So something has to change. And the government's got to work on that, but it's not anything to lose sleep on. And if you're in Social Security right now, it's not going to affect you at this time. We do not believe it at all. So what they're thinking about doing is a couple of areas. One is increase maximum earnings to Social Security. Currently it's 147,000. Over 147,000, you don't get taxed by Social Securities, but by raising it much higher, you can get more income coming in. Raise the normal retirement age. Currently 66, born between 43 and 54. 67 for those born in 1960 or later. They might change, give or take a year or so with that. Lower benefits for future retirees. They might change the benefit of the cost of living adjustment, like based instead on consumer prices. They might do it on wages or vice versa. And that's what we just spoke about there. COLA as they go by, cost of living adjustment. The bottom line for baby boomers, your benefits are not likely to be affected by Social Security reform, which is a good thing, unless the benefits are going to go much higher, but I don't think that's going to happen. So what's a clear way to think about Social Security? Good question. Let's see. Social Security is inflation-protected income. We've all paid the income, the premium I should say, in every paycheck, so be smart about how and when to collect. And this is really important. We'll cover this. So, if your monthly benefit today is $2,000 a month, and you live 10 more years, you pick up $276,000. 20 more years, 602,000. 30 more years, $1 million. So it's an excellent program. You definitely want to be involved with it. Of course, this analysis includes a 2% cost of living adjustment, or COLA, as they say. Now, if your monthly benefits 2008, and annual cost of living adjustments are 2%, in 10 years, your $2,000 check will be $2,400. 20 years, it goes up again. In 30 years, that's almost kind of like inflation. Everything goes, price get more, and you earn more for yourself. So how much can I expect to receive? That's a good question. How much, your benefit depends on a couple of factors. One, how much you earned over your working career, the age at which you applied for benefits. You know, these, as it says, so these things can change and are subject to many factors. Now, at age 62, and this is where it gets a little fancy here, each year's earnings are tallied up for index for inflation. Highest 35 years of earnings are averaged, and they have what they call bend points. But what you're looking for really is a PIA, right here, primary insurance amount. This is the amount you will receive at your full retirement age. Keep in mind those words, full retirement age. Benefit is increased each year by cost of living adjustments, which is great. Now, baby boom was born in 1960, turned 62 in 2022. Maximum security they earn maximum security earnings every year since age 22. So their formula comes up to $11,430. Then they break it down, as you see here, that their total amount, after going through the formula the government sets up, is $3,357.60 at full retirement age.
That's per month?
That's per month.
Oh.
Now that's a full retirement age. There's another factor here too I'll go to in a little bit. So that's good to know, but why shouldn't I claim early at 62 instead of delaying to full retirement age or even 70? You really don't want to do 62 if you don't have to, because once you start it, you're stuck. You'll never go, you'll get the cost of living adjustments, but you won't get the higher amount that you could have gotten if you wait till full retirement age or if you wait till age 70, and I'll explain that in a moment. So your monthly benefit will be reduced if you claim early. It may also be reduced for taxes and Medicare premiums, and benefits could be withheld if you work. We're not trying to talk you out working, but for every $2 you earn, you have to put $1 aside, or the government will. But they do give it back to you later. When should I apply for benefits? Well, this is where you got to decide. This is where everyone has their own different feeling about this. Your health, you worry about your health status, your life expectancy. If your household's average lifespan is very short, you might want to start taking benefits earlier. You might have a need for income, whether you plan to work anymore. Survivor needs. Everybody's different on this, but the numbers make difference too. You'll get less if you start early. That's the best I can tell you. Will it be enough to live on? Probably not. Now here's how the government does it now, and they changed these rules, I think it was, I want to say 20 some odd years ago, where now it used to be 65 years of age, you retire and you collect full retirement benefits. It's changed now, so full retirement, if you're born between 43 and 54 is 66. If you're born 55, it's 66 and 2 months, and you can see down. So at these points here, it's 66 and a half, let's say. If you take it before then, you won't get the full benefit. So you want to try to stay there at least 66 and 6 months and get the full benefit. So here's how it works. You will receive a percentage of the primary insurance amount, which in this case here, if you apply at age 62, which is, I'm not suggesting you do it, but you have to, your retirement amount would be deducted. It will be 75% of your regular amount if your retirement age, full retirement age is 66. If your full retirement age is 67, you're only going to get 70% of your full retirement amount. So you don't really want to retire, you don't want to apply for it early. Now, if you age 66, you get 100%, you get, at 66, you're 100%, if your full retirement age is 66, if it's at 67, you only get 93% if you retire at 66. But that's still a lot better than retiring at 62 and only getting 70%. So the longer you wait, the better off you will be. Let's see. Now, the next thing you want to look at is once you get to full retirement age, if you can delay taking it until age 70, the way the rules work now, for each year you delay it until age 70, you'll receive 8% delayed credits, as they call it. So if your full retirement age is 66, you'll get 100% of what you should be getting. But if you go to 60, if you wait till 67, you get 108% of your full retirement age PIA, or your primary insurance amount that you would get at 65. So each year you delay until age 70, it can be substantial difference monthly-wise. And this is where a lot of questions come in.
And then you get your 2%
On top of
on
it,
top of that
you do. So
every year.
correct. So it really pays to delay it. Now, some people think that if delay, you should take it right away. Well, I'll cross that bridge in a moment here. But here's a couple ways you can see where you stand, how much you estimate to get. You can go to the Social Security website. I can help you with my calculators, or you can go to these areas here. All very good. A bigger check. Why delay benefit? This is what we're talking about. So if you start claiming at 62 and your full retirement age is 67, in the second column, you're only going to get 70% of your benefit. But if you wait till 67, you get 100% of whatever that might be. And if you wait till 70, you get 124% of it. So that's a big number. So if you would start it, let's say at 65, you get $2,600. But if you wait till you get $3,700. That's huge. And that just for the rest of your life. So you really don't want to mess with that too much. And if that's with the 8%, that's the 8%, and this is with cost of living adjustments, be up to $4,359. So it pays you to wait on if you can. If you can't, you can't. But if you can, it's a great way of going. So you get more income later on. The important part of this whole thing is, now, benefit age 70, you claim at 62, you get $2,400, $3,500, $4,300 at 70, and this just shows you cost of living adjustments as time goes on. Now, how can I maximize my benefits? You want to look at your Social Security statement, which the government sends out to you. Take a good look at that. You want to see if it's accurate. Are any missing years? Can you improve it by working longer? And it's usually accurate. That much is pretty much done. Are there any missing years? I mean, you can check, but that's usually pretty good. The big question here is, can you improve it by working longer? And yes, you can. So if you have some lower working years, or years you weren't working because you had children, when they fill out the 35 years, they put zeros in those spots. So you not have any money there to help you get more Social Security. But by working longer, I'm not saying forever, I'm just saying maybe look at a year or two if you're up for it. It'll help you a little bit.
They take, well, how is it, your highest income years, 35 years worth of income?
Yes.
They'll rank them the highest.
Yes.
So it doesn't have to be consecutive or in order.
No. They just take your highest.
Highest 35 years.
Yes.
Okay.
But if you have zero, like you had children, then you have zeros in those spots. So you want to fill those up by maybe working an extra year or two.
Yeah.
So apply for Social Security at the optional time. Your income needs both now and in the future. Your life expectancy, your spouse's life expectancy. There's different ways you want to look at this. Taxation of benefits, or taxation of benefits here. Let me give you a chart about this. So first of all, if you apply for Social Security before full retirement age, you're going to $1 benefits will be withheld for every $2 you earn over $19,560 in 2002. Benefits will be readjusted at full retirement age, so they'll get the money back to you, it'll come back to you.
Although they don't keep it forever?
They do not. It's not a tax, it's just a withholding temporarily
Okay.
on it. So don't stop working if you're going to work, but if you can avoid taking Social Security to begin with, don't take it. Because once you take it, and you take it for more than a year, you're stuck. If you take it for 12 months or less, you can pay it back and wait till you're 65 or 70 and take the money out and get the benefit of it. But if you take it for more than a year, you're stuck with it forever. You don't want to get stuck like that. But they're not trying to discourage you from working. But to avoid this earnings test, as they call it, wait until full retirement if you can.
So you could work part-time and not have anything taken out as long as it's under that $19,000?
Correct.
Okay.
That is correct. And here's how the taxation goes. The worst case is married filing separately and living with spouse. So the whole thing, 85% of Social Security is taxed. Then you can see the breakdown up here, under 32,000, nothing's taxed on Social Security, up to 50%, up to 85%. But keep in mind, it's 50% of Social Security. So let's say, I'm gonna make this number up, let's say you're getting 20,000 a year from Social Security. You're getting taxed on 10,000, but you're not losing 10,000, you're getting taxed on 10,000. So you're not like you're losing a lump sum money, but it is taxed, and that's how that's what this is about. But the married filing separately, living with spouse, that's the toughest one. They get taxed like the most.
So they tax your Social Security benefits?
They do.
I didn't know that.
They do. They do, but it's not horrible. I mean, no one wants to get taxed on it, but. Okay, now how do you minimize tax on Social Security? Reduce other income with tax advantage investments, but not municipal bonds. Municipal bonds are very popular, but your that Social Security income is added towards your Social Security taxes, tax-free income. You can anticipate IRA required minimum distributions, which put you in a higher tax bracket. Consider drawing down IRAs before 72. Convert traditional IRA to a Roth, because you take money out of a Roth, it's not taxable, because it's return your own money. And it wasn't tax deductible when you first put in. The problem with that is that when you convert it, that's a taxable situation. Going from IRA to the Roth, it can be pretty big tax. That's your income for that year, so that's not everybody's cup of tea. And then you have the delay Social Security reduced over years with benefits are subject to tax. So try to wait as long as you can before you take Social Security out. That's what that's about. If you can pay down debt, adopt a simple lifestyle. Some people do, some people get more complicated. So it depends what you want to do. Continue to manage taxes throughout retirement. But besides these suggestions here about the Roth IRA, there's certain, and I'm not suggesting to anybody, there are insurance products you can get involved with, like whole life, where they can play games with taxes. There's also products like master limited partnerships, where it's return of your principal with interest. And that, they can avoid some tax with that. But there's risks to both, so I'm just giving you ideas what's out there, that's all. Medicare, this is important too. Medicare may shrink your check. So, this is very interesting if you give a second look at this. If you claim at 62, first of all, you're getting less money to begin with. So you're getting 70% of your 2,600, which you would have gotten at 65. But the important part here is that you see 70% from 2,600 gives you 1,820. But you gotta pay 170 this year. So it's 9% of this. But if you wait longer, let's say you wait till 70, we get the fullest amount you can get, you get 124% of your $2,600. So your monthly payment will be $3,200. But because this is a bigger number, the Part B for the Medicare is only 5%. It doesn't take as much of a share. Even though it's the same dollar amount, because you're receiving more monthly, it doesn't hurt you as much. Whereas 5% versus 9%, it hurts. So you're gonna lose more money on that. And this is the problem. If you apply early, your benefits stay lower and stay lower for life. Cost of living adjustments magnify the impact of earlier delayed claiming. The longer you live, the more beneficial it is to delay benefits. Now, like I said earlier, some people think they're gonna have a short life, and that you have to balance out in your mind. Nobody has a right or wrong for this. And just because a lot of family members have a short life doesn't mean you're going to have a short life. So you got to figure out what's going on with that. Your benefit may be taxed and reduced to cover your Medicare premiums, which we just spoke about. And I'm not trying to talk you away from working, but if you can not take the benefit at 62 and you want to keep working. Delaying benefits may give surviving spouse more income. And that's the game you got to look at also in that part there. So here we go. I'm not going to live long, so why should I just claim my benefit while I can? Now, for couples, you should always maximize the higher earnings benefit to protect the surviving spouse. Now, here's how this works. So, the spousal benefit is half the primary worker's primary insurance amount. So, this example here, John's PIA is $2,000, Jane's is $800. If Jane applies at full retirement age, the benefit will be $1,000. 50% of John's. That's just how it sets up with the government. Do it like that. So they don't penalize you for being married, basically. Now, for spousal benefits, to get that, the primary worker must have filed for benefits, Spouse supposed to be at least 62, but like I say, you don't want to do it at 62, they cut you back. No delayed credits on spousal benefits after full retirement age. So you're not gonna get any, once you start taking, yours isn't gonna go up. Once it's set, you're set. That's it on that.
So your spouse has to have already applied and be taking benefits.
They have to apply.
You
For-
can't take benefits on them if they're still working and they haven't applied.
Well, there's a caveat there. You could have if you're born in 1954 or earlier,
Oh,
but they changed the rules a few years ago.
I thought so.
Yeah, you used to be able to work off of theirs and let yours grow, so to speak. But that's changing now. Now, where lower earning spouses' primary insurance amount is more than 50% of higher earning spouse PIA, both spouses delay to age 70, because then they both get a larger amount if one passes away. You play a little bit game, who has the most amount of money coming in. You'll get that higher amount. So that's why maximizing lifetime benefits over average or long life expectancies. So it goes back to the same thing. If you think you're gonna live a long time, I have a lot of people, I have to tell you, I have a client one just passed away, is 103. So people they're living out there, and it's good. Reading the information and so forth that the government uses, the average life of people in their 60s today is around middle 80s approximately, give or take. So, but the things I'm seeing, I see people going much longer than that. So, which is good. And their lifestyle is good also. Now, where lower earning spouse primary insurance amount is less than 50% of higher earning spouse's IRA, the lower earning spouse claims early, higher earning spouse claims at 70, because the lower earning spouse will jump up to the higher earning spouse at 50% at full retirement age. Now, if you start claiming at 62, you're going to get lower than low. You don't want to do that. I'm trying to impress everybody. You want to try to go 65 and then go from there with it. Now, I have a customized booklet to give everybody. Whoever wants to contact Lisa at the library, they go and contact me, whatever. Now, I'm already widowed or divorced, so how does that impact my Social Security claim? Well, back in the 70s and 80s, a lot of people divorced and married several times. But if you were married for at least 10 years, you won't get the same benefits. So it's kind of neat the way the government set it up. It's very, very good. If you're widowed or divorced, you may be eligible for survivor benefits, divorce survivor benefits, or divorce spouse benefits. That can increase your monthly check. So on survivor benefit, we depend on the age at which the deceased spouse originally claimed this benefit. That's why it's always important, if you can wait till 70, the leftover spouse will get more money, as well as the spouse who waited till 70 will get more money. So if deceased claimed before full retirement age, survivor benefit will be limited to the higher of the deceased spouse's benefit, or 82.5% of his PIA. So you get less money. Why go through that? If you can hold out till you're older, it sounds funny when you're older. I mean, you are older, but you won't wait till you're 70. But anyway, if deceased claimed after full retirement age, the survivor benefit will include delayed credits, which is great. You want to get that. So try to hold out. Okay. The age at which the widow claims survivor benefit, the actual benefit. If survivor claims before full retirement age, the survivor benefit will be a fraction of the original benefit. 71.5% of primary insurance amount if claimed at 60. If survivor claims at full retirement age or later, the survivor benefit will equal 100% of the original benefit. So,
what's the earliest age you can apply?
on this situation, you're 60 unless there's a medical situation. You go on, please, 50 or 55.
So 60 for a survivor, for a widow.
Yes.
Okay.
In normal, it's 62.
And that's also would be 62 for a divorced spouse?
Yes. But again, 62, you don't want 5, you don't have to. The most problems I have, not problem, discussion I have with folks is, I want to take out 65, I'll wait until 70. But the averages come together about 8 years later. So if you wait 8 years, you'll be ahead of the game by waiting until you're age 70. The other flip side to that is, if you take the money out now at 65, let's say your full retirement age is 65, and you keep it in an account, and you can earn 8% or better on it, then it'd be worth your while. But there's no risk-free out there at 8%. So you're risking it. So you're better off playing it safe. This is your safety, this is your money coming in. So Joe and Julie are married. Both are full retirement age. Joe's benefit's $2,800. Julie's benefit's $1,500. Joe passes away. Julie notifies Social Security, and her $1,500 benefit is replaced by a $2,800 survivor benefit. But had Joe applied for Social Security younger, that number would be lower, and it may not have helped him. Maybe it'd be the same as hers. So you don't want to do it too early. Let's see what the next slide says here. Delayed claim here. Joe's PA is $2,800. Joe delays claim to age 7. His benefit 124% of $2,800 or $3,400. So now, because he waits till 70, she's jumping up to $3,400 when he passes on, and not just $2,800. He would have gotten it at 65. So it helps, particularly in the marriage situation, with one of them waits. The higher earning person waits before they claim it. Now here's the rules for survivor benefit. Couple must have been married at least 9 months at date of death, except in case of accident. Survivor must be 60 for reduced benefit, 50 if disabled, or full retirement age for full benefit. Survivor benefit not available if widower or widow remarries before age 60, or 50 for disabled, unless that marriage ends. If divorced spouse, survivor benefit available if the marriage lasts at least 10 years. So you could have a person, guy or girl, married 3 different times, and if they had marriage that lasted 10 years, then everybody's getting
You
Social
have to
Security.
pick one though, right? You have to pick one spouse to claim on? As long as,
No.
if you had multiple spouses of 10 years at least, you pick the one with the highest income to claim on for the highest benefit?
Well, this way, as it works forward, that's a good question, by the way. That's a really good question. You got me thinking on this one.
You know, pick and choose.
Yeah, no, it's when you had the first spouse and you get divorced and you collect it, you can apply for Social Security and collect it. Once you get married to the second spouse, then the first spouse is gone. You're going on the second spouse, either on their Social Security or yours. And then you go to the third one, the same thing goes. The second spouse's Social Security is gone, and you go to the third person's Social Security benefit or your benefit again. So it's not like you have a pick and choose really.
But if, okay, so
So
you
if
had
once you move on-
3 husbands,
You just keep them away. You can.
and you, by the time you're old enough to claim, you're not remarried.
You go with the last one.
You go with the last one?
Yeah.
Okay,
Mm.
so it always knocks out the
Yeah.
previous ones.
You know what happened is, I'm gonna confirm that for you, but that was, I won't confirm it for you.
Yeah.
That's the first time I got asked that question. That's a good question. I like that one. But as it stands now though, if you got married, got divorced, you get the first person's, and when you got married a second time, you get the second, your first one stops, because you got remarried. So you get the second person's, or your Social Security, whichever one's higher. And the third one, same thing, you would drop the second one, you're done with that one. So you'd be on the third person's Social Security benefit, or on yours. So I tend to believe it'd be the third person, the last one you'd be on. But I will confirm that. Okay, good question. Okay, divorced spouse benefit. Marriage less than 10 years or more, we're just saying that. But you have to stay married to get that benefit. Now, if your benefit is worth as much as your past spouse's, it's not gonna make any difference to you. But if the reason why it comes into play is because sometimes the lady of the household takes time off to raise the kids, or it could be the guy these days, but if the person's taking care of the kids is losing those years and getting zeros for income in Social Security calculation. So that's why they have a lower benefit, and that's why they have these benefits for the women. And I'm not just trying to say women, that's just how it was in the past, that's all changing now. But it can be guy or girl, whoever's making more money, whoever's staying home and taking care of the kids. So more than one ex-spouse can receive benefits on the same worker's record, so it doesn't make any difference. If you have 3, let's say 3 women, you're married to the same guy at different times, they don't have to fight over each other about who's getting Social Security, which is a good thing. Everybody gets equal amounts, whatever. Benefits paid to one ex-spouse do not affect those paid to the worker, the current spouse, or other spouses. Divorced spouse benefits stop upon marriage of spouse collecting benefits, not upon remarriage of the primary worker spouse. So divorced spouse benefits stop upon remarriage, and that's what we just spoke about.
And it's true that they don't even have to know that you're claiming on their benefit, right?
Lisa, you should be up here. You're good.
I've sat through many of these presentations.
That's true, though. You do not have to know anything
Yeah.
about the person anymore. Throughout your life, after 2 years, you're on your own. As long as you can prove you had paperwork they were married and not married, and you have some idea what the person might be, so they can identify who the person is. There we go. Gee, this is really more complicated than I realized. It does get confusing. I have to say, it does get confusing. So in life, would you rather be early or delayed? Pay a penalty, get a bonus. Now, be early means you get at 62, you get some money, or at 65, you get cash flow coming in. But if you get delayed, if you delay it, you'll get much more money coming in. So pay a penalty now, get less money, or get a bonus later on. It's an individual choice. I can only tell you that if you wait like 8 years or so, if you start at 70, it'll take you 8 years to catch up to other people. But then you got the higher income coming in. And you're retired, it's nice to have extra money. I can just tell you, the people I deal with, everybody's looking for money, no matter what age you are. So if you're retired and you're older, the likelihood of you getting money from other sources gets limited. So it's nice to have this income coming in from Social Security from the beginning. I mean, you know, from when you get older, you get another bonus check coming in at age 70 instead of doing it 65. So they're making terrible costly decisions. And it's really about the biggest mistakes I see really are people claiming at 62, where they could have gotten, they should wait till 65 at least. And I've had people tell me, Phil, you can put the money aside right now, get yourself a nice boat or something down the road. That's true, but down the road, nobody seems to be looking past 10 years from 70. I guess everybody thinks they're going to pass away before they're 80. I don't get it, but I get this all the time. I don't understand it, but they're figuring they have more money now, they can play around more now. But the reality is, things are going to get more expensive in the future, and you're going to wish you have more money in the future. So that's the angle I take. I'm more of the one that suggests you keep the money, you keep out of it until 70 and then apply for it. But everybody's different.
So do you see a lot of people still working, but they still want to claim their benefits? Is that what it is? They just want that extra check coming in even though they're still working? Or they want to retire?
A lot of people apply at 62 and did not realize that they're going to be taxed on like $1 for every $2 they earn over $19,000, $50, the number was. So I see that a lot, unfortunately. And even though it says you can start over again by returning the money within the first 12 months, quite frankly, the people who did this don't have the money to return to begin with. So they're really stuck at the lower pace. It's a shame because they could really use the higher amount down the road more than anybody. The wealthy person, not going to make a difference to them, you know. So, but again, they should wait, get the most out, and wait till they're 70. And if you can make ends meet without Social Security, why be penalized for working? Because it's a penalty in a way. You do get the money back over time once you hit full retirement age. But excuse me, if you don't have to do it, don't do it. That's the best I can tell you. And I have friends of mine doing it. I have friends of mine tell me they're going to take it when they're 65. They're not going to wait till 70. But I can only tell you the numbers say if you're going to live past 80, if you're going to live past your early 80s, you want to have more money coming in, and you'll have that if you wait till you're age 70 and start claiming. So, I don't know. If you have a short life expectancy of your family, then maybe think about taking it at 65, or even sooner, depending on what's going on. So Social Security offers you inflation-protected income you can't outlive. How do you beat that? Including benefits for survivors. Your monthly benefit will be reduced if you claim early, which I'm trying to keep you away from that. Couples should always maximize the higher earnings benefit for the surviving spouse. If you're widowed or divorced, you may be eligible for benefits that can increase your check. So we covered that also. Did we not? Did we cover that one? Everyone could use a personalized Social Security claiming analysis to understand how and when to apply and how their monthly benefit will fit into their overall retirement income plan. But you should be getting something from Social Security periodically about what you should be receiving. If you don't, you can always go to the Social Security office or sign up online for it. So let's see what we got here. In the context of Social Security, these are other ways of getting money into your accounts, pensions, IRAs, investment portfolio work. But you're gonna get Social Security if you not wanna work. They may not go together if you don't wanna work. A lot of people wanna get Social Security, they don't wanna work anymore, which is fine. So that Social Security personnel can estimate individual benefits, tell you the amount you are entitled to now, which is important. You should know what you're gonna be getting. They can't project future benefits, help with innovative strategies designed to maximize benefits. I'm not gonna tell you that area. That's not their business to do. So you have questions, I can help. I can help. So don't think twice, be more happy to help you out. When should I apply for Social Security? What if I want to keep working? What if I've already applied? How can I coordinate spousal benefits? But it's better you look into this now instead of after you apply, because you can't reverse it. Once you're stuck, after 12 months, you're stuck.
I think there used to be a way to apply on your own and then switch it to your spouses once they start
Yes.
taking it. Do they still let you do that?
You can apply on your own, and you can switch on your spouse. Yes, you still can do that.
You still
You just
can-
can't. You just can't get that the way they did before. Is yours would grow on the 8%. Yours could keep growing, and you would live off your spouse's spousal income. It doesn't work like that now. So you can't get. You're going to give. If you start applying, you're going to give up yours, your income. You're not give it up. You're not going to get that growth on it. You can't get the. I think apply and suspend. I think it was called, and you could get their income off your spouse, and yours would. You would suspend yours and keep growing. Did that answer your question?
I think so.
So, all I can tell you is if you delay it, the better off you seem to be.
And if you can delay it for 3 years past 70, that's the highest benefit? Is that what it
70 is
is?
the highest benefit.
Oh,
After 70 is
70.
going further.
I
That's
thought
it.
it was 73, but it's
No.
70 now?
Correct. It's
Okay.
70. They did change the IRA distribution. We have to start taking out 72, but that might be changed to 73 too. I'm not sure, but that. So what do you do next? Social Security is too important for guesswork. And it really is important, folks. It really is, because once you get in this, you're stuck. You can't change it after 12 months, and once you start taking for 12 months, you may not have the wherewithal to pay it back. So you be careful what you do with that. And it costs me absolutely nothing to talk to you about. I'm really happy to help you, because I see people do this the wrong way, and they're really sorry about it. So it's something you really want to be careful about. So here you are. I give you complimentary 1 hour service or whatever it takes. That doesn't make a difference to me. Go over claiming strategies, complete the evaluation, meeting request form now if you want. But it's really important to understand what's going on with Social Security. It's not totally confusing, but there is some parts you want to get down so you're okay with it. So thank you very much, Lisa. I really appreciate it.
Thank you, Phil. So Phil, that's Gladstone Advisors?
Yes. Now, my office is located in Red Bank. However, I have a ton of really super nice clients in Long Branch, and I'm here all the time, very active in the Chamber of Commerce, and it's just a great community in Long Branch.
So people can reach out to you directly, or they can contact me and get the booklet?
Yes,
And also get your info if they want to set up their
be glad to help.
free consultation.
And absolutely no obligation. I'm not trying to sell anything to anybody. This is really trying to help because I see what's going on in my own client base, and I'm just trying to get the word out there to make sure you know what you're doing before you sign up.
It's very complicated. I don't think anyone should try to do it by themselves.
No, I'm with you.
Yeah.
But thanks again, Lisa.
Thank you
Appreciate
very
it.
much, Phil. Thanks for being here with us
My
tonight.
pleasure.
Thank you.